While the entire world was watching the Iran war today, three massive stories slipped past almost everyone. Nike just warned it's heading into serious financial trouble. SpaceX officially filed for what could be the biggest IPO in human history. And the FDA approved a weight loss pill that could change the lives of hundreds of millions of people. Here's everything you missed and exactly what it means for your money. It's easy to get tunnel vision when a war is dominating headlines every day. But here's what you need to understand about how markets actually work. The most important moves in your portfolio often come from the stories that aren't on the front page. The companies quietly warning of trouble. The IPOs that are about to redirect billions of dollars of investment. The drug approvals that create entirely new markets overnight. Today had all three. And if you're only watching Iran, you miss them. In this video, I'm going to break down Nike's alarming earnings warning, what SpaceX's IPO filing actually means for you as an ordinary investor, and why Eli Lilly's new FDA-approved weight loss pill is one of the most significant medical events of 2026. Nike's warning, one of the world's most recognizable brands, is in serious trouble. Let's start with Nike because this is the story that deserves the most attention from investors right now. Nike reported earnings today, and the guidance it gave for the rest of 2026 is alarming. The company warned that sales are expected to decline for the remainder of the calendar year. And here's the number that really stings. Nike is projecting a 20% drop in its key China market this quarter alone. Think about what that means. China isn't a small market for Nike. It's one of the three biggest markets the company has in the entire world. A 20% quarterly decline there isn't a blip. It's a structural warning signal. Here's why it's happening. The Iran war has done two things to Nike specifically. First, it's pushed up jet fuel costs, which flows directly into shipping and logistics expenses across every product Nike makes and sells. Second, and more importantly, Chinese consumers are pulling back on premium Western brands as economic confidence falls. That's not a Nike problem. That's a broad signal about what's happening to consumer spending in the world's second-largest economy. Nike stock is down nearly 30% in 2026 alone. It's on track for its fifth straight negative year. That's a street glass seen when the brand was fighting off copycat competitors decades ago. But here's the investor question you should be asking. Is this a buying opportunity, or is this a company in structural decline? The bull case is simple. Nike's brand still has extraordinary global power. Its direct-to-consumer shift has been building for years. Its product pipeline, including significant investments in performance running and women's fitness, is genuinely competitive. At these prices, you're buying a global icon at a significant discount to its recent valuation. The bear case is equally real. China uncertainty isn't resolving quickly. The athletic wear market is more competitive than it's ever been. Adidas, On Running, Hoka, and New Balance are all taking real market share. And a company warning of declining sales across its biggest markets isn't a company that's going to bounce back in one quarter. Watch Nike's next update closely. If China stabilizes, this is one of the most interesting contrarian opportunities in the market right now. SpaceX just filed for the biggest IPO in human history. Now let's talk about the news that has the finance world genuinely buzzing today. SpaceX confidentially filed for an initial public offering Wednesday. It's targeting a valuation of approximately $1.75 trillion, making it potentially the largest IPO in history, more than double Saudi Aramco's previous record of $29 billion. Here's what you need to know if you're thinking about this as an investment. The company has done something no aerospace company has ever done. It's merged a rocket business, a global satellite internet service, Starlink, and now an AI company called xAI, all under one roof. When SpaceX went public, you'd be buying all three simultaneously. The retail allocation is the genuinely historic part. The company is planning to give 30% of IPO shares to ordinary investors, 3 times the industry norm. Tesla shareholders are expected to get priority access. Shares will be available through platforms like Morgan Stanley's E-Trade, Fidelity, Schwab, and Robinhood during the subscription window. But here's what most coverage isn't telling you: the honest risks. SpaceX's estimated annual revenue is around $16 billion. At a $1.75 trillion valuation, you'd be paying approximately 109 times revenue. For context, NVIDIA, the most hyped tech stock in the world, trades at around 30 times revenue. Apple trades at 8 times. SpaceX is priced for perfection across the next 10 to 15 years. If everything goes right, Starlink dominates global internet, Starship opens space commerce, xAI competes with OpenAI. That valuation makes sense. If anything goes wrong, a major Starship failure, regulatory challenge, or Musk distraction, the downside from that valuation is severe. The filing timeline suggests investor briefings in April and a June listing. You've got time to do your research, and you should. The FDA just approved a weight loss pill. Here's why it's a bigger deal than you think. The third story from today could have the longest-lasting impact of the three, even though it's getting the least coverage. The FDA approved Eli Lilly's new obesity pill, Foundayo, today. Lilly's stock jumped more than 5% on the news. Here's why this matters beyond just one company's stock price. Until now, the most effective obesity treatments, Ozempic, Wegovy, Mounjaro, Zepbound, all require weekly injections. That's a significant barrier for millions of patients. Many people who could benefit from these drugs won't take them because of the needles, the weekly routine, or the cost of clinical administration. Foundayo is a pill. You swallow it. That sounds simple, but it removes the single biggest barrier to the entire obesity treatment market. Eligible Medicare Part D individuals may be able to get it for $50 a month beginning as soon as July 2026. Think about the scale of what that means. Over 1 billion people globally are classified as obese. In the US alone, that's 42% of the adult population. The global obesity drug market is currently around $25 billion. Analysts project it reaching $100 billion by 2030, and that was before a pill option existed. Eli Lilly's rival Novo Nordisk got its oral obesity pill Wegovy approved in December and launched it to strong reception in January. So now you have two pharmaceutical giants competing in what could be the most valuable drug category in history, and both have oral options on the market in 2026. For investors, here's the question worth sitting with. Lilly is up strongly this year, even as the broader market has struggled. At its current valuation, a lot of the obesity market opportunity is already priced in. But if the pill version of these drugs genuinely expands the market by removing the injection barrier, the growth runway could be significantly longer than the current valuation suggests. The other angle worth thinking about is the broader economic impact. If obesity treatment becomes genuinely mainstream, not just accessible to wealthy patients or those with generous insurance, the downstream effects on healthcare costs, worker productivity, and chronic disease management could reshape multiple industries over the next decade. Today's FDA approval is a milestone. Where it leads is one of the most interesting long-term questions in investing right now. Here's today in 30 seconds. Nike warned of declining sales for the rest of 2026, including a 20% drop in China. The stock's down nearly 30% this year. Watch whether this is a buying opportunity or a structural decline story. SpaceX officially filed for the biggest IPO in human history, $1.75 trillion target valuation. 30% goes to ordinary investors. It's priced at 109 times revenue. Do your research before the June listing. Eli Lilly's obesity pill Foundayo got FDA approval today. It's a pill, not an injection. That removes the biggest barrier to the entire obesity drug market. The downstream investment implications are significant and long-lasting. 3 massive stories. One day, none of them dependent on what happens with Iran tonight. Stay informed. I'll see you tomorrow. If this breakdown helped you see the stories that got lost in today's headlines, give this video a like and subscribe to Global Finance Market News. We cover every story that moves your money every single day. Hit the bell, because in this market, what you miss can matter just as much as what you watch. Everything in this video is for educational and informational purposes only. This is not financial advice, and I'm not a financial advisor. Please always do your own research before making any investment decisions. Past performance is never a guarantee of future results. Always consult a qualified financial professional before investing.